Oh shit, let me tell you a story. It's a story about a time in my life when everything felt like it was falling apart. I was in a really deep depression for about 3 years, actually. It was the only time in my entire life that had ever happened to me, and I felt like I had lost all my faith. I just couldn't I couldn't see the path forward, so I packed a backpack, a tent, and a bicycle. And I went to France. I needed to go somewhere where I didn't speak the language, where nobody knew me, because I was constantly looking over my shoulder back home. The girls were out of school. I put them on a plane to their father, and I just left. I had very little money, just enough to get by. I was camping, bathing in streams. Literally had 2 changes of clothes. I probably didn't look or smell great, if I am being totally honest with you. My goal, I needed to figure out why I was on this planet, because I thought I knew. I thought I was so guided. I did everything they told me to do, and it just didn't work out the way I thought it would. So fast forward, toward the end of my trip, I am practically out of money. I bike over this rise, and there on a hilltop is this massive field full of wild strawberries. Oh my god, you guys, I absolutely adore wild strawberries. They are just the best thing ever. So I parked my bike, and I went up there, and I ate my fill. I stuffed myself, then I packed a bunch of them in plastic. That was going to be my dinner for the night. And as I am doing this, I happen to glance down the hill, and I see this white car parked down there, with a man and a woman inside. I guess they were probably in their 60s, and at the time, I was maybe 38, and I thought to myself, why aren't they up here, enjoying these amazing strawberries they like? Seriously. The best thing you could ever put in your mouth, but you know me, my nature is just to share, so I picked a couple of handfuls, even though I had more than enough for myself, and enough for dinner, and I went down to their car. The woman was on the passenger side, and I asked her in my broken French, would you like some wild strawberries? And she said, no, thank you. But would you like a cheese sandwich? And I thought, chuche ching protein, and I said, well, yes, I would. I would like a cheese sandwich, very much. They had this picnic basket in their trunk, and they gave me a cheese sandwich, which I devoured. Then she asked, would you like a cool drink of water? And I'd been filling my water bottles in those little artisan wells in the villages, and it would always get warm. So I said, yes, I would like a cool drink of water. Thank you very much. And they gave me that. Then she said, would you like an apricot? And I am telling you, if you saw an apricot by the side of the road, it was probably at a fruit stand, and I just didn't have the money for it, and I absolutely love apricots. So I said, well, yes, I would love an apricot, but it is not necessary. Why are you doing this? And that woman, she looked me dead in the eyes. It was like she was looking right into my soul. I am getting chills just thinking about it. I'll never forget that moment, and I'll never forget how grateful I am to that woman, because she said to me, you wanted to share what you have with us. We want to share what we have with you. That, my friends, was my moment of clarity. It was the moment I realized that we are all here to share the gifts we are given, whatever those gifts may be. And I've been given a lot of gifts, which is why I am here right in front of you, and why I work so incredibly hard on your behalf, because I am sharing what I have to give you. And I got news for you. It doesn't just go one way, you guys showing up here, participating, asking questions, coming together in community, trying to help your family and friends understand about sound money. I get so much more from you than you could ever give me. I don't know if that's true, but seriously, this is why I work so hard for you, because that is why we all here. We here to share the gifts we've been given. Let us make a real change and a real difference in this world. And 100%, I know we can do that. Peace. Now, let us dive into some real talk, because what I am seeing out there, it's not making me feel warm and fuzzy. Oh shit. We talking about non-financial business debt, loans, liabilities. You see those big corporations, the ones always boasting about their success. Well, guess what? They redoing it with borrowed money, lots of it, whether you are a government, a corporation, or an individual. The game ultimately plays out the same way. And those massive tech companies, the ones we always thought were drowning in cash, yeah, they've been piling on more debt too, just to fuel their ambitions, their growth. All the things they trying to achieve it. It's a bit of a house of cards if you ask me. And then there are interest rates. Remember, bonds, which are essentially debt, are heavily influenced by interest rates. And I've got to show you something that really, really bad. I am sorry to be the bearer of bad news, you guys, but the 2-year, the 10-year, and the 30-year yields, they've all broken out. Can you see that? Technically, what that means is that interest rates are almost certainly going higher, and investors, they demanding to be paid more for the level of risk they taking on. This is not good. Not with all that existing debt that needs to roll over and all that new debt that needs to be taken on at these higher rates. This, my friends, is probably the single most important chart I am showing you today, because it's a flashing red light. It's telling us that we are in deep doo-doo, that all this debt, the chickens are finally coming home to roost. The consequences are happening now, so yeah, they might be partying on the stock market like at S1999, but this is an early warning signal. It's telling us that the markets, they not having it. The bond vigilantes are back, and they watching, they waiting. And how does all of this impact consumer sentiment? Well, inflation, right, means people have to spend more just to maintain their current standard of living. And the level of inflation we're seeing where folks are forced to borrow, using 4 easy payments just to put food on the table, that doesn't exactly instill confidence in the future, does it? But hey, there you go. There as your tale of two cities, and it's really obvious because what is holding this whole thing together, honestly, is consumer confidence. But don't you worry your pretty little head, because look at the earnings. The earnings, these corporations are making more money than ever before. Yes, inflation benefits them. It is a huge boost to their bottom line. But hey, surprise! U.S. inflation officially rose 3.8% in April, eroding people's paychecks. That's the CPI. That is the official inflation number. Do you really think that is real? Because I honestly don't. They rig things to make it look better, to sugarcoat the truth, but quite honestly, since 2021. And really, if I am being completely real about it, since 1913 by design, U.S. wages never ever keep up with inflation. Nominal wages maybe, but in real terms, the average worker is losing ground. They falling behind. And this is extremely important because Main Street, your everyday people, they don't live from asset appreciation. The 1%ers do, sure, but Main Street doesn't. So if you look at that bottom purple line there, after inflation, real average hourly earnings, is it any wonder that people are suffering? Because frankly, by design, when inflation rises faster than wages, living standards inevitably decline, or individuals are forced to take on more debt just to keep their heads above water. And to be honest with you, inflation pressures, they seem to be escalating to me. What do you think? Here's the PPI, the wholesale inflation numbers. So these haven't fully trickled through to you and me yet, but producer prices matter because businesses, eventually they pass many of these higher costs onto the consumer, and don't worry, they've got to protect their profits. But that means that inflation pressures can continue building underneath the surface of the economy, and we can see it yet because it is still primarily in the producer price index that will come down the line. But look at this 6% print. It has triggered a very important pattern shift. Let me show you what I mean. There you go, guys. This chart shows producer prices breaking out. Just like those interest rates were breaking out to the highest level ever. This is significant because commodities, they sit near the beginning of the economic chain, and you can have these paper prices, they can hide a lot of ills until they can anymore. Because when raw material costs rise, those higher prices, they've got to move. And where do they move through? Manufacturing. Transportation, food, every single aspect of the global economy, and that's why I say this is all just heating up. But this is a very big deal because this is another breakout, and it creates even more pressure on households, and certainly this is all reducing your purchasing power. And at the same time, higher interest rates mean that the bond vigilantes, they beginning to notice this inflation risk, just like I showed you. But what about the craziness happening in the gold and silver markets? Because all of you are going, oh, why isn't gold rising? Why is gold rising? And why is silver rising? Right, well, we looking at the spot contracts. But let's just take a look at this, because a stronger than expected rise in consumer and producer prices, it raises concerns that the Fed may need to increase interest rates in the short term. Okay, so while I know that people watch the spot gold and silver market and think that truly represents gold and silver, it is understandable. Because that is what we were taught, but like inflation, paper markets dictating the price, well, frankly, that is all by design as well. And they admit it is not me just saying it or pulling it from some airy-fairy site you read. When they set things up and they admit that all of this is by design. And even though that is in the process of shifting, we've been talking about that for almost 1.5 years now. Wall Street logic goes like this. Why would you hold gold? It does pay interest, bonds, debt, that's better. Well, gold doesn't have to pay interest because it runs no counterparty risk. It is the single safest thing that you can do according to the Bank for International Settlements, which is the biggest bank. It's the central banker, central bank in the world. So in theory, bonds or debt are more attractive for investors than gold and silver because bonds pay interest. But I'd like to ask you this little question. This is my $10 trillion Zimbabwe note. If I had a bunch of this debt and it paid me a bunch of this, can you tell me what good this would do? Because frankly, 1 trillion times 0 is still 0. So let's look at what is happening on the technicals, because these are contracts, right? And you can kind of see a wedge forming here. This is just a 1-year contract. Now, I would like to point out to you that it is substantially higher. The silver spot contract is substantially higher today than it was just 1 year ago. And if you recall in our conversations, I said there are a few things that can happen, and one of them that is happening is that the spot silver contract is staying inside of that narrow range, giving that 200-day moving average an opportunity to catch up. But look, it is still 18% above that 200-day moving average. That doesn't mean overvalued, it does mean overbought, because they can create as many contracts as they want without limitations. So it doesn't truly reflect. Oops. Doesn't reflect the true fundamental value of an ounce of silver. But, last week I showed you, during this period of volatility, some very large players are standing for delivery on those silver contracts. So let's take a look at it, because that is what you are looking at. This is the 6-month silver contract. Now you can see there, S, a lot less silver for delivery out there, isn't T there. Okay, but in the meantime, silver prices are more volatile because they are telling you that there is a major shift that is going on. Here is the technical chart on gold, the 1-year spot contract. Again, I will point out that it is substantially higher than it was. The contract is just 1 year ago, and we still 5% above the 200-day moving average, which means that the spot gold contract is no longer overbought, but you can see how it is sitting. It is creating that wedge, like a wedge of cheese, right? And we see if it breaks out above or below. And all of this is just from paper contracts, not the real stuff in both gold or silver. And remember, everywhere around the world, the global central banks are accumulating gold. This is the 6-month COMEX gold. Can you see that somebody is taking delivery? Somebody is taking delivery even with the price pullback. And I can tell you exactly what those contracts are because I didn't put that data in there. But is all of this volatility about keeping you away from buying gold? Because ETFs to technology demand physical buyers, this tells us that it is a structural trend, not just a short-term trade around the world. Retail investors were drawn to gold, S-price momentum, and safe haven appeal, driving bar and coin demand up 42% year on year. So I want you to keep this in mind that those paper contracts, that is one thing, but bar and coin demand up 42% year on year. Demand in China surged 67% year on year, considerably higher than the previous quarterly record. And by the way, do you really think these central banks are going to be honest with us about what they were really accumulating? Because other Eastern markets, including India, South Korea, Japan,